Welcome back to episode 5 of Following the Money, a technical trader's outlook. I have a lot I want to get through, particularly iron ore and what's happening in China right now. First, I have a disclaimer. The views, opinions, and research and all my analysis is purely just my own opinion, and it is certainly not financial advice. You need to do your own due diligence or talk to your own financial advisor if you are going to trade or invest in the financial markets. Alright, so I've got the FINX Steel ETF on the chart now. You can see it's been in a very strong uptrend. And as it hits this distribution area up here, it tends to pull back, but it has finally broken out of it. And textbook, it's pulled back and it looks like it's about to bounce off this previous distribution area, making it, I guess, a demand area now. Now, there are many reasons why this may be occurring, but one thing I do want to highlight to you is what's happening in China right now. I've got one of the Chinese share indexes on the chart now. You can see it's been in a massive downtrend. And there's been multiple rounds of stimulus coming out of China at the moment. This is largely due to their failing property market at the moment. A few of their big property developers have gone under as well, as you would already be aware. Now, we know that when the Chinese economy is doing very poorly, they stimulate with infrastructure, and therefore the demand for iron ore tends to go up. That is one of the reasons why iron ore stocks are doing quite well at the moment. But this chart here for the FINX Steel ETF does look very good as well. One of the things I like to put on the chart when there is a clear trend line is a linear regression channel. I'll just put that on the chart for you now, because you can see there's clearly a trend line that's being respected here. And what I use it for is, one, we all know that price is going to revert to the mean, which I guess is the whole point of this channel. But it also shows you the oversold and overbought or overextended lines as well. So you can see that here. And it has just been floating around the mean here, but it does look like it may be able to break out of that. And this is where you would target if you are going to use these channels going forward. I like to use them. That's not the sole base of why I'm going to be in and out of things, but I do use it for targets. Next, I've got the Russell Mid-Cap Value ETF on the chart, which closely follows the Russell 2000. And this is a very nice base being formed and a very nice pivot point being formed as well. As price goes up, the volume goes up, and as it's pulled back, the volume's also dropped up substantially as well. If this breaks out, it's a very good sign for those small to medium cap stocks. Hence why I do watch that, because that's what I largely trade. Now I've got gold on the chart. Again, this looks very good. This tends to happen a lot with gold, is that whenever it breaks out into all-time highs, because it is such a sentimental asset, it does tend to be faded, like it was done here, here, and here. But it's pulled back and it hasn't gone back very far. It's only been able to go back to its 20-day moving average, forming a pivot point. If it does break out of here, I will be watching, well, I'm already watching them, to be perfectly honest with you, is a few gold stocks. I've never actually gone and bought gold, whether it be a derivative or physical gold. I'm not that much of a nutcase, so I'm going to go and buy physical gold and have it stored in my house somewhere. But gold stocks, I will look to trade them. So what I recommend, and what I do, I guess, is I just have a watch list of gold stocks that I do like, whether it be because of the revenue or because they're a market leader, whatever it is. And if I foresee any bases being formed, I will look to trade them. Granted, the underlying market, which is gold, is performing well and is an uptrend, which will look like it may well be in, granted it does break through into all-time highs. FINX, this is a global fintech ETF. We've talked about banks last week. They're all doing very well globally, which would also extend into fintech companies doing very well. I've got the weekly chart up. This looks very promising. It does look like it's going into an uptrend now. We've got a pivot point forming. If this breaks out, again, all these fintech stocks are going to be doing well also. And this is the time where you build a portfolio, a watch list of fintech stocks that you do like and will be looking to trade if this continues. Next up, I've got APP, App Loving Corp, listed on the NASDAQ. It IPO'd at pretty much the worst time. So April 2021, it was doing all right at the time, but as we know, November was the high of the markets and it's been smashed ever since. But now it looks like it has formed an accumulation base. So you've got the left shoulder here, the head and the right shoulder, and forming a very nice tradable base here as well. Looks like it may be breaking out. I'll go down onto the daily time frame. And look at this, multiple waves, volume profile looks very nice, looks like it might be looking to break out here as well, and the revenue seems to be doing well also. It was previously doing a lot better with its revenue growth, but 3 billion is still pretty good. It's only got a market cap of 15 billion as well. BLD is next. This is a home builder. Home builders across the board are all doing very well with regards to revenue and just share price performance. This has formed a nice high tide flag. It looks like it's going to be breakout. I will be looking to trade this one potentially. I can actually probably put a linear regression channel on this as well. And it is trading within that channel. Keep in mind, it is at the very top of the channel. Why that's important is that if this does break out, it's probably more likely to fade, because if you get a breakout where it heads up and then closes down below and you've got that long wick above at the top of the channel, then it is likely it's going to fade back down to the mean as well. So keep that in mind. That's why it's important to put these up on the chart. Next up, I have DFH, Dream Fighters Home. Again, this is a home builder. They're all doing very well with revenue. I'll bring this one up for you. I mean, look at that. Every year, for the past 2 years, it's done pretty much 70% a year in revenue. And it's income-wise, 262 million in income. That's pretty good. Again, in an uptrend, formed multiple bases that we could have traded. I'll put one of those channels on it as well, because there's a clear trend here. And it's doing the same thing. This one looks a little bit better because it's forming a base here and the top of the channel is here. So if I had to pick between the two, I'd probably trade this one. And it's also forming something that I call a cheap base, which I've discussed multiple times in this video series, where you've probably got trapped buyers and sellers within here. They've got orders around here. Institutions know this. Why would I buy up here when I can most likely buy down here? The price churns around here. Impatient sellers end up selling their orders within here, and then once all the liquidity has been sucked up, then it can break out and head higher. Keep that in mind. I'll be watching this stock going forward. Next up is CLVT, listed on the New York Stock Exchange. Has been in a downtrend, but looks like it's forming an accumulation base with a tight pivot point being formed here. I'm watching for that breakout. I'll put that linear regression channel on here as well, because there's a clear trend being formed, and it did trade in between this channel, and it looks like it's forming a pivot point around the top of this. Again, because it is at the top of that channel, it very well might fade and head back lower to the mean, which would be somewhere around here. I usually don't like to buy breakouts of accumulation bases. I usually like to watch it break out and then form a base after that. I'll just bring something on here, 1 second. What I typically like to see is a breakout, a pull back to the base, continued of that uptrend, a bit of a base being formed like this, and then on that breakout here is what I typically like to look to trade. So this will be on my watch list for quite a while by the looks of it. Next up is CrowdStrike, doing very well in a clear uptrend, hasn't even been able to go below its 21-day moving average, and it's forming a high tight flag at all-time highs. Should you get some sort of a breakout off here, it could be a very short trade with a tight stop loss. Having said that, I think there are better opportunities in the market, so I probably won't be looking to do anything with this particular stock. Now I've got NXT on the chart now, another US stock. This one debuted, listed on the market at the start of last year, so it's been on the market for about 12 months, forming a base, and it's broken out of this linear regression channel here on its earnings, so it's clearly done very well. A massive surprise earnings announcement, so there'll probably be a lot of institutions looking to dive in here. It keeps closing at the highest as well. I'll be watching this one because if it performs any sort of base where I might be able to get in, well, there's clearly a lot of demand for it, so it's likely that trend will continue, and that's why this one will be on my watch list. Now, I just look at the financials here, clearly doing very well. I can see why institutions may be looking to get into this one. Next up, I have GRBK, another home builder stock. I'll look at the financials quickly. And doing pretty well, just like all the other ones that we looked at, in a strong uptrend and forming a cheap base here. Like I mentioned before, a lot of impatient buy and sellers around here, forming a cheap base here. If you get that strong breakout, those are the ones that I will be looking to trade. I'll put a linear regression channel on here as well. And it's sitting right around the mean as well. This one looks the most favorable out of the ones that we've looked at so far. But if you were to go and do a scan on just home builders, you'll see a lot of them are setting up just like this. So if you like the idea of it, I would recommend that you go and look at further stocks to see if any align better with your current trading strategy. DUG, currently a market leader on the ASX, has broken out to all-time highs. It's likely it's probably going to pull back. We've got an earnings announcement coming up in about 2 weeks. I'll put that channel up on here as well because it's a clear trend channel right here, and it's trading at the very top, so it's likely it's probably going to pull back to the mean here as well, and perhaps that's somewhere to re-add to your position if you had traded this stock previously and are currently holding it. Next up is DRO. This has been my best trade of the year. I originally bought within this pivot point here, re-added around here, and I've sold out around this top here. What I like to do is I like to add Bollinger Bands onto the chart. I'll do that now. And it managed to close out at the top, and now you're getting that fading move around here. It is possible it heads higher, but what this reminds me of is actually Lake Resources about 2 years ago. Now Lake's doing, pretty poor at the moment, But if I go and look at it, 2 years ago, back in April last year, this looks very similar to that drone shield chart that we looked at before. Pivot point here, about 3 retracements within the base, broke out, headed up massively, had all these bars closing out the top of the Bollinger Bands, and then eventually one big one happens like this, signaling the top, and that's when you need to get out. Now, we haven't had this just yet, but I will say DRO is one of those stocks that I managed to just time very well and add a lot onto, and I didn't really want to risk it too much, so I've closed out here at a pretty reasonable price. And if it does get any sort of a pullback and a nice base, I probably would look to add to that one. Next up is GTK. So I've talked about this stock every single week. It's finally broken out of this base. It's likely there's probably going to be a lot of people talking about it on Twitter, because I did see a lot of people posting this base on there. So now that it's finally broken out, there's probably a few people making a song and dance about it now. It's very important to make sure that you're taking profits along the way. Me, for example, I already bought in within the base and within the breakout. Again, where my stop loss is, I'm going to have a take profit. My first take profit where I sell half the position, that's equal to the stop loss. That target's already been hit. So granted, this stock doesn't gap down all the way down here. I've already locked in profits, which means I can't actually lose money on this particular trade. And then I look to re-add should it pull back. Next up, I have MCD or McDonald's. We all know that this company won't catch me eating there. Haven't eaten there for probably about 15 years. But besides the point, I saw a very interesting video where they have a few restaurants which are pretty much 90% automated, have AI running the show. This company has probably invested a substantial amount into AI technology and will be one of the first restaurants to capitalize on AI. And if you look at the performance of many other AI stocks, it is lagging. It does have an earnings announcement coming up soon. I don't typically like to buy before them. But if you look at the charts of all the other AI stocks, it may continue that trend. Does look like it's sitting around a distribution area now. If you do get some sort of breakout, I may look to actually trade this stock and may add it to my long-term portfolio for that very reason. Next up is CRPT. I've talked about this company a couple of times now. It looks like it's finally broken out, bounced off its distribution area here. So this is where every time price came up here, the supply came in, making a distribution area, pushing back down. It finally broke out of that, and then it retested that and bounced off it. So now this is where demand looks like it starts to come in, and it's finally breaking out and heading to the upside. I'll put one of those channels up as well, because there's a clear trend up here as well. It's trading around the mean, so up around here would be where my price target would be if I were to look to trade this particular stock. Next up is MRVL. I've spoken about this stock multiple times now. It's finally broken out and it's pulled back to this previous distribution area, and it looks like it's fading it and looking like it may actually bounce off it and head back higher, making this a demand area to watch this stock going forward. IoT still forming a base here around its mean as well. Again, I'll put one of these up on the screen. Right around the mean, likely it will probably break out and head for this upper channel as well. Granted, the market continues to do well, which is very important if you're going to be trading this type of way. I've got Marathon Petroleum on the chart now, MPC. If you look at the price of oil, oil's doing pretty poorly. Now, most other oil stocks were doing very well last week, and they're still doing all right in the grand scheme of things, but they've managed to break down. But this stock has kept most of its gains. Why that's important is that if you do see a rally in crude oil, which is long overdue, then this company has proven to be a market leader, and those are the ones that you want to trade if you are a momentum trader or a breakout trader like myself. This one will remain on my watch list. Next up is CALM. I've spoken about this stock at length many times. Formed a nice accumulation base here, broke out on very high volume, decent earnings report, forming a base here, and looks like it's actually breaking out. I typically don't trade something this early, but it's proven to be a strong performing stock, and that's why I continue to watch this one. GTHX, broken out of this base here, and it's forming another tight base here as well. I'll go down to a smaller time frame to view it a bit better. So right here, looks like it's going to churn a bit for the next week or two, but any sort of breakout of that, I may look to trade this one. Next up is GLOB. This chart looks very nice. Classic accumulation base being formed here. I'll put the awesome oscillator up. You can see there's a bullish divergence on the chart here. Distribution area here, managed to break out and has formed a base on top of a base here, and it looks like it's heading out into 52 weeks highs as well. I've gone and put 2 linear regression channels on the chart now, so you can see here's a downtrend. It played very nicely in between these 2 levels, and now it looks like it's reversing, heading in an uptrend, and again it's respecting these 2 channels. So here it may even base around here for a little bit while this catches up, but this is an indicator that I've only recently been using, and I have been getting a lot of value from it. Hopefully you do too, and want to start using it as well. And lastly, I've got ARDX. Has been in a very strong uptrend, hasn't even managed to go below its 21-day moving average, and it's forming a high tide flag now. Multiple waves within this base, so these are the kind of trades where you'd have a very tight stop loss and you'd be in and out of them. You wouldn't be looking to hold this long term. Not that there isn't any value in holding it long term, but it's already very well extended from its moving averages. So if you do get a breakout, it's probably going to break out, somewhere around here and then have to eventually pull back to at least its 50-day. So just keep that in mind, but I do like to have these ones on my watch list. That's all for this week. If there's anything you want me to cover next week, just comment down below and I'll do that for you. Thank you.